Welcome back, everybody. Today I'm doing my top 3 option plays for the week. This will go over a bunch of plays that I'm looking to put on this week. And this time I do have one speculative play that I'll save for the end that may or may not fit your risk profile. So first off, I think that there's opportunity in the market to start buying some leaps for some long-term plays. If you look at SPY, 7 stocks represent 25% of the weighting of SPY, and that represents 82% of the gains for the year, which is pretty insane. Like, there's 7 stocks holding up the entire SPY, and then that means there's a lot that didn't do so well. And if they don't do so well, I think that's where there's some opportunity to pick up some leaps and make some money. So the first one I'm looking at is actually LUV, Southwest Airlines. And if we look at the 1-day chart here, you can see we're at like all-time lows here. I think literally, not all-time, 52-week lows. We're at $39 is the low of the 52 weeks. We're 64% from all-time highs, so there's room for it to grow over the course of the next year or two, which is why I'm looking at buying some leaps. If we go to the 5-year chart, you can see aside from this March dip here, like we're below where it normally trades. And then even if it did dip on this Omicron news for the new variant of COVID, you can see that it did come back up pretty quickly. So I think it's just a good entry point to buy some leaps in Southwest Airlines. And then the other thing to look at is like the RSI does indicate that it's oversold. I just think this is a good one to buy some leaps on. So I'll be looking at buying something that's really far out. So January 2024, give us some time for this play to develop. And basically what I'm going to be looking at is looking at 0.8 delta and check the extrinsic value and pick one of these plays here. So either the 25 or the 27.50 strike. It's going to cost about $1,600 or $1,400 to get in, depending on your fill price. The spread's pretty big here, so I'm just looking for like a mid-price fill. Look at the extrinsic value. If we go with the 25, that'd be about $400 that we're paying to hold this position for the course of 2 years to control 100 shares, because everything else would be intrinsic value. And since it's at high delta, if LUV does go up, we'll be getting that 1-to-1 gain as though we own 100 shares, pretty much. So that's the first one. Next up, we have ZBH, Zimmer Holdings over here. And again, this is a similar story. If you go to the 1 year, 1 day, we're 1% from 52-week lows. Actually, it looks like a gap down here. Yeah. So we're at the lows right now. And you can see that the highs, we're at 180. That's about 61% from where it is right now. If we go to the 5-year, 1-day chart, you can see we're trading back where it normally trades long. So there's not too much room to go down. Obviously, COVID spiked down here in March, went down to 74. So you kind of see where your max loss potential is from that gap down. But we're at that trading range where it normally trades. So the potential, I think, is better for it to go up than down. So I'll be looking to put on one of these guys as well. This one, unfortunately, can only go 1 year out. But we're looking at 0.8 delta. Probably looking at the 85 or the 90. So there's about $3,300 to secure this position for a similar story that I just said with LUV. Just buy it, don't look at it, and if the stock goes up over the course of the year, you make money. So next up is Boeing. And what you can see is on the 52-week chart, we're at all-time lows again. And it's showing that it has the potential to spike up multiple times to go above this level. So I think it might be a good entry point for Boeing. RSI is slightly oversold, not as much as the others, but I still think it's a decent entry point for a leap. If we go to the 5-year, 1 day, not as fancy as the previous plays. Looks like for a majority of the time, it trades around 315 to 460. Although we have a lot of volume here at 170, so that might act as like support. So I'll be looking to put on one of these guys because it just looks like a decent setup, like a good entry point to get into BA. If we go to the Analyze tab, let's see what we're looking at. January 24, looking at 0.8 delta, $7,100 to secure this position. So if I do enter this, I'll be buying around here. And again, it's just one of those, you buy it, set it, let it sit, and forget about it. And then last but not least would be the more aggressive play in Docusign. And basically, what this is looking at, go to the 1 year, 1 day here. What this is doing is playing the price level here. Like there was a gap down from earnings, and I think that's pretty massive. And I didn't see anything in earnings that would make me think that it was warranted, actually. So anyway, what this is doing is playing this price level here. There's action. It seems to be a low. If we go back, let's check the 5 year real quick. Down here. Yeah, for the last like 2 years or a year and a half, you can see it's normally traded above this. So this is a huge reaction to earnings. I think it's just a good chance if you want to be a little bit more aggressive to try to make a quick buck. This might be one that you can play. Switch this back to the 1 year. Basically, what you'd be looking to do is sell some put spreads below this area, or maybe buy some call spreads above it. And basically, if Docusign goes up, like it'll gap up quickly, and it has potential to fill this giant gap here. And I like that's a money making opportunity if you get in on this. I'm not sure if I'll actually put this one on. I'm trying to be less speculative, but if I was being speculative, this would be one I'd be looking at setting up. Maybe even a bullish zebra, because a jump from 157 to 229, what is that, like $70 worth? That'd be $7,000. So let's go ahead and see what a bull zebra would look like on that. 45 days out. Oh, I guess we got here. We're being bullish, so what we would do is we'd be selling this guy. And then the extrinsic value is 9. We'd be buying the 470. Buy 2 of those. Risk profile. And so what this basically does is simulate owning 100 shares without having unlimited loss to the downside. So your max loss would be the debit you pay to enter this position, which would be 3,800. But then for every dollar it goes up, and we said we could see it going back up to what, 227. So like if it does gap up at 227, you make 6,400 or so, 6,700. So I think this would be one that if you want to be a little bit more speculative, this could be a decent position. If it does gap up, you make a hefty profit because that's a lot of points to pick up. But you do still define your max loss, because the max loss you can have on this position would be the debit you pay to enter the position. With that said, I hope you guys enjoyed this video. If you haven't yet, like, sub, subscribe, and good luck trading this week, guys.